If you chose a variable rate mortgage back in 2022, you probably felt it hard. Interest rates spiked fast, and some borrowers saw their payments increase by as much as 250%. And if you had a variable rate mortgage with fixed payments, there's a good chance you got hit by a trigger rate. That means most of your monthly payment was going towards interest and not principal. We've seen some amortization stretch out to 75 years. Yes, 75 years. That's not a path to financial freedom, that's a trap. So now that we're in 2025, the big question is, should I choose a variable rate mortgage today? In this video, I'm going to give you 5 key reasons why a variable rate mortgage might not be the right move for you this year. Now, to be clear, I'm not saying variable rate is bad for anyone, but it's definitely wrong for some people. And I want to help you figure out if it's right for you. I'm Justin Chausse of the Chausse Mortgage Group, and if you're looking for honest advice and smart money moves, you're in the right place. Make sure you hit the like and the subscribe button so you never miss an update that could save you thousands. All right, let's break down the 5 reasons you may want to avoid a variable rate mortgage in 2025. Reason number 1, you think interest rates are going to rise. Now, no one has a crystal ball, but if your gut says rates are heading up again, then locking into a fixed rate might make more sense for you. Now, keep in mind, fixed rate mortgages usually come with penalties that are higher if you break early, so it's important to work with a low penalty lender that makes sure you can refinance if rates drop. And that's exactly why I usually recommend staying away from the big banks. They're not known for their flexibility, and that can cost you later. Reason number 2, you stress about rate changes. This is the biggest factor for most people. If the idea of your mortgage payment increasing makes you anxious, don't go variable. Your mortgage shouldn't keep you up at night. If rate hikes stress you out, a fixed rate mortgage gives you the peace of mind. That peace alone is often worth more than lower interest rates. Reason number 3, your partner is not on board. If you're in a relationship and your spouse or your partner is nervous about rate changes, don't ignore that. Money stress is one of the biggest causes of conflict in relationships, and a mortgage is a massive financial commitment. If one of you are risk adverse, you both need to act that way. Go with the option that keeps peace in the household. Reason number 4, there's a better short-term fixed rate available. Right now in 2025, we're seeing some shorter fixed mortgages like 1 and 3 years that are actually cheaper than variable. If you can lock in short term and ride out the next couple of years, you'll have a chance to reevaluate when things calm down. That's what my wife and I did in 2017. We took 2-year fixed, rode out the uncertainty, and then moved into a variable rate later when the rates dropped. It worked out beautifully. Reason number 5, you don't fully understand how variable rate mortgages work. This is a big one. Most Canadians don't know that there are 2 kinds of variable rate mortgages. One adjusts your payment when rate changes, the other keeps your payment fixed, but increases the amortization and interest when rates go up. If you're in a fixed payment variable, you might feel safe because your payment hasn't changed, but in reality, your debt payoff is crawling. Worse, you might have already triggered longer amortizations without even realizing it. And if your mortgage has a bona fide sale clause, you're stuck. You can't refinance, you can't switch lenders, and you might miss the chance to lock into a better deal. That's why working with someone who explains all of this up front is super important. Now, if you like doing your own research, I've got something for you. So let's recap. Here are the 5 reasons to avoid variable rate mortgages in 2025. Number 1, you think rates are going to rise. Number 2, you get anxious about rate changes. Number 3, your partner isn't comfortable with it. Number 4, a short-term fixed rate is cheaper right now. And number 5, you don't fully understand how the product works. If even one of those reasons hits home, it's worth having a conversation before you sign anything. Coming up next in this series, we're going to cover when it does make sense to go variable, why fixed might not be the best option for you either, and how to compare the 2 to make the right choice. Check out the next video in the series, book time with a link in the description, and I'll walk you through all the options together. I'm Justin Chausse with the Chausse Mortgage Group, and I'll see you in the next video.